Well, good morning. I'm first presentation of the day. My name's Paul Johnston. I'm an Executive Director of Metal Tiger. We've just checked before and half the room on the left have shares in Metal Tiger and half the room on the right don't. So I don't know which side. I maybe have to appease one side and convince another side. We've been very active in 2015. My job today is to, in about 5 or 10 minutes, give you a very quick overview of the business and demonstrate the work that we've done thus far in the resources sector, and hopefully give you the confidence that we know what we're doing and we've got a good plan for the recovery in mineral resource investing that we think is about to happen in the marketplace. So, disclaimer, which, as I've said previously before, means you have to not take anything I say seriously, ignore everything I say, contest everything I say, and do your own research. As with all these companies and all these presentations, you have to make sure you're thoroughly comfortable yourself before you put a single pound into any investment. Why we are investable, we've put a list of points down there. We think, hence the question mark, that we're near the bottom of the resource sector cyclical pullback and that we're about to experience a growth in the sector. When that growth occurs, history tells us that it happens very, very quickly. And that your best time to invest is when the shares are bumping along the bottom, which is where we think we are today. We're diversified. We have a number of different metals. We have a number of different countries and jurisdictions that we operate in. We have a team of resource finders. Our chairman is Terry Grammer, who's known for his serious work in Australia and finding the Nova Nickel discovery, and 3 or 4 scenarios where he's taken small companies like Metal Tiger and turned them into very, very large concerns. We're hoping he's going to do that for us here. We are natural resource traders. Part of our team are used to trading on the markets on AIM, TSX, ASX, and so on. So we are hoping to make profits through our trading alongside our project investing. We have multiple projects that we invest in directly. We don't overcommit to any one thing. We're going to quickly run through them shortly. We have a highly active news flow. Our nomad probably is driven to distraction. We send so many RNSs out to market. But we believe that communicating with investors is not something you do every quarter or every half. You do it on a regular basis to show that you're still alive. And finally, we have working capital management and control. Without question, we think it's important to have enough financial and management resources, but definitely financial within the business to keep the business running without having to go to the market and ask for money on an emergency basis. If you do that in today's market, you'll be killed with a 50% discount to your current share price in any placing. So we keep our working capital under control at all times. There's our board, Terry Grammer at the top. He's, as I say, a very well-known resource finder. Cameron Parry, a driven, aggressive CEO who drives our strategic negotiations on the deals that we engage with. Myself, I'm a chartered accountant and I'm an executive director involved with day-to-day running of the business. And Alex Borelli, for those here, he's at the back of the room, about to run out the door probably. He's also an accountant and he's our non-executive director on the board. Strong board, right kind of people, right mix of skills and capabilities, sensible cost levels, just what you need for this size of company. We're a 3 million cap company at the moment, so we don't need excessive management costs within the business. There's our fundamentals. Share price has been at or around a penny for quite some time. That's a bit of a miracle in today's market. Share prices over the last year or so have fallen dramatically. For most of our peers, we've managed to keep a level keel. And so in absolute terms, we're hugely disappointed with our share price performance. We should be a lot higher. But in real relative terms versus our peers, we're outperforming, which is where we should be. And we intend to carry on being going forward. Market cap, as I said before, is about £3 million. And keep that in mind as you look through the next few slides. Significant shareholders, we have a good mix of shareholders that hold a significant number of shares in the company, and we want that to build and grow. It's very important to have that because it locks up a good proportion of your share capital, reduces the liquidity slightly, gives people confidence to invest in the company knowing that there are some bigger holders there. So we do want to build on those. We have a few shares ourselves. We'd like to buy more. We're locked out almost continuously because of the activity of the business. If we could buy more, I would buy more, which I'll probably get told off for saying, but it's simply the case. We can't when we have an active period of news underway or when we're within 2 months of releasing interim or final results. We have options. Our options for the management team are priced significantly above the share price when they're issued, because options should be challenging, and that's what we always make sure ours are. The first part of our business is direct equities, which is where we invest in listed companies on the London Stock Exchange AIM market mainly at the moment. We're looking at TSX and we're looking at ASX. All these markets for resource shares are chronically undervalued and confidence is low, so it's the very best time to start picking up positions, and that's what we're doing. In our work from June 14 to June 15, we made a considerable amount of money on that investing in listed companies. And that money we fed into our projects arm of the business. And as we go forward, any profits that we make through our investing will feed into our projects. By doing that, we defray dilution and reduce the amount of hit that shareholders today get as we raise money from the markets going forward. It's very important that the proportion of the business you own today as an investor, we have to protect that so that we try and keep that as high as possible as we go forward. There's no value for you if we dramatically dilute the business going forward and you own a tinier share as the months and years go by. Our larger investments in direct equities have included Kibo Mining, Eurasia Mining, Ariana Resources, and very recently ECR Minerals. We invest when we think there's a strong period of news flow going forward for the company that we invest in, and when we think there's a big potential upside to the share price going forward. We don't put it in with a very long-term view. We put it in with a sensible investing view, which is medium-term, waiting for the developments to happen and the share price rises to come. We take profits aggressively when we've made multiple returns, and we are not shy about doing that because that's what our job is. As a result of our direct investments, we have quite a growing number of warrants that we hold in these companies, and we're building the warrants actively in the background. We want to have a very large warrant portfolio in Metal Tiger because that's the massive kicker for the future as the share prices recover. Warrants are the right to subscribe for a share in the company at a fixed price for a fixed period. We generally have 3-year warrants, which means that they last until 2018. And if the sector recovers, we can find some of these warrants in dramatic profit in the next 2 or 3 years. And that will build a tremendous amount of value for the current shareholders in the business. So that's direct equities. We do have a few other things we invest in that are not necessarily pure equities. We're building a royalty business. We're building a variety of alternative investments in the background, and we'll release more information to market as time goes on. Our direct projects within the business are our biggest part of our operations. We can make money from trading, we know that, but we're hugely optimistic about investing directly on the ground in projects. Companies, organisations, individuals can't get support at the moment for some of the best projects that you have in the world. Finance is often not available, and that presents a problem for the owners of those projects, but it presents an opportunity to a company like Metal Tiger who isn't concerned about the cyclical downturn phase. We might all be depressed in natural resources, but it's the very best time to invest. Invest when you're lonely, scared, tired, afraid, and think you'll never make any money, and you're probably just about to. Our projects are across different parts of the world, but only where we have the utmost confidence in the local operating team. We're not an operator. As an investing company, Metal Tiger is only allowed to invest. It can't operate projects, so we have to align ourselves with local people or local teams who know the countries, the metals, the projects inside out. And if we don't feel we have that confidence, we will not engage with anybody, and we walk away from 90% of what we look at, largely because we don't have that local confidence. So Thailand is our first and our home area. Metal Tiger was named after the year of the tiger. So Southeast Asia is very important to us, and we want to build and grow that side of our business. We've just exercised an option to acquire 90% of joint venture interests in Thailand, gold, copper, antimony interests. We have another option to acquire a much larger portfolio, which includes licenses around a historic mine and includes a large amount of mine-specific data, information and so on, and a number of other projects in Thailand. We've been there as a team, or we went there as a team in October. Hugely positive visit, very, very prospective, little investment locally, a very good working environment. It's anomalous that there hasn't been more money invested in exploration in Thailand. Obviously, if you can take an existing project, accelerate it and start to produce quickly, then that has to be your biggest focus. So we're currently looking at a number of different things, and we want to build a strong business in country. Spain, we've signed a joint venture deal with a partner who's operating the project in Spain. We've drilled in Spain for tungsten, 40 kilometres to the east of W Resources projects. We've found a substantial amount of high-grade mineralisation from our drilling for tungsten in Spain, and recently we've just found our first gold. So we're hugely excited about the projects in Spain, and we're looking to build our Spanish business. As we go forward now, we want to take on additional opportunities in and around the areas we're already operating in, because that's more cost effective and gives us a stronger business as a whole. The exploration data and results, there's a little bit of information given there, but what I need to say about Spain, and just to demonstrate the quality of the team, our Spanish team have done work on the ground in Spain for 2 or 3 years. They've done surface-based work only. As part of the joint venture agreement, we bought them a little drill rig, goes on the back of a trailer attached to a Land Rover to drill some relatively shallow holes, 20, 30 metre holes. They had 2 specific high-grade targets they wanted to go for, first of all. So we drilled them first of all, and what they predicted is almost exactly what we found in terms of the assay results that have come back. So the quality of their work on the surface is exceptional, and they have plenty of other things that we can work on as well going forward. So at the moment we have quite a strong tungsten and potentially gold project in Spain that really we think is not reflected within the value of our business as a whole. Botswana, indicative of the current situation in the world, we were able to pick up an interest in Botswana on a very, very sensible basis. This project is a copper-silver project in the Kalahari copper belt in Botswana. It is a huge project. If you have a look on our website and look at the extent of potential mineralisation, you'll be astonished. We've been able to pick up a 30% position in some licenses that became available because a company went into administration, and we were able to acquire these licenses with our joint venture partner MOD Resources, who are listed in Australia, for a really sensible amount of money. And we have sensible commitments going forward, but we are determined to get on the ground and start exploration work because we want to build the value of this project. Have a look on our website and have a look at the research on Botswana. It's very important, and look at who some of our neighbours are in the area, and you'll find it very, very interesting. In the north, they're spending potentially hundreds of millions of dollars developing a major mine facility and growing their business in the northern section of this mineralised system. This is a huge benefit to Metal Tiger and to MOD Resources. We're determined to get active news flow from this project, and we think it could add considerably to our market value as we move forward. There's a nice little chart on the next page. That kind of tells you in one image what I've just said in 60 seconds. Have a very, very close examination of that particular chart because it's very important for our business. Russia, we have an option with Eurasia Mining, who are also at the show, to undertake on an equal basis with them a gold tailings production opportunity in Russia. We're very comfortable operating in or investing in projects in Russia with Eurasia as our partners because they know the territory very, very well and have the local knowledge and understanding that you need. I know it gets a difficult press at the moment for a variety of different reasons, but when you're dealing with our type of work on the ground, we've not identified any problems or difficulties that were not normal business matters that you couldn't deal with in the normal way. So we're very, very interested in this particular opportunity, which could give us revenue and profit within a relatively short space of time for our type of company. Tanzania, we have joint ventures with Kibo Mining, who are listed on AIM as well. First one, Pinewood Uranium. We think there's going to be an enormous upsurge in uranium investing interest in the relatively near future. We're building positions in that both through equities and also with regard to direct projects on the ground. We'll carry on building that. If we're wrong, it will not sink us. It's just a part of our business. If we're right, it will make us as a company a very large amount of money and enable us to reinvest in our wider business over the next 2 or 3 years. We think we're right, naturally. We have a JV with Kibo on gold, Morogoro, and we've been doing some work with Kibo on that project, and hopefully there'll be some updates to market in the relatively near future with regard to both of our interests in Tanzania. So in conclusion, we feel we're at the right time in the resource cycle as an investing company. This thing is quite interesting. If you've been investing for as long as I have, you've seen a few cycles in the mineral space. The downswing is horrendous. It lasts far longer than most people anticipate. The longer it lasts, the sharper the upswing. When the upswing comes, most people won't notice the first 6 months, but that's when the major gains are often achieved. If you're buying a share at 0.05 pence and it goes up to, and it was 30 pence a few years ago, if it quadruples to 0.2 pence from where it is today and you look at the charts, you'll hardly notice any movement over that 5-year period. But if you bought it at 0.05 pence and it goes to 0.2, you've made 4 times your money. And that's when the real gains start to pile on. So we believe investing now at the lows, accepting the additional risk, is the best way to do it. For our projects, we haven't got enough time in the day to look at all the stuff that comes through the door. 3 to 4 opportunities a week at least we have to look at. We have now a broad portfolio, sensible costs for each element of the portfolio. We can manage it all with our working cap. We're hugely excited about what the future holds. Our market cap is tiny, and we think over the coming years we are going to see some interesting moves in the valuations of our type of business. We simply want to be the best in our sector in the investing side of natural resources, and we work at the moment more hours almost than we should do, because now is the time, as somebody said to me before, now is the time to get set in natural resources. Thank you very much. Any questions? Yeah. 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 No, I think there's a better value on the TSX. And the problem is on the TSX, it's liquidity. We think our judgment is that there are stocks on AIM that will move faster. AIM is bedeviled by the market maker system, which enables share prices to move quite dramatically even in difficult times. So in terms of making trading gains, the best opportunity at the moment we think is AIM, but we're quietly building on the TSX, and we have to go quietly because you can't buy large amounts of stock on the TSX. It has to be very small, 10,000 shares here, 10,000 shares there, and literally small amounts because there isn't any volume. But as soon as TSX shows signs of increasing liquidity, we will be heavily engaged on the TSX. We have a full schedule of all our targets right now. Okay, that's it. Great, thank you very much.